Okay, so it looks like you think the Fed's going to set us up for a policy mistake here. What do you think they're missing? Number one thing.
Well, they're missing globalization, first and foremost. I mean, you've moved manufacturing, other production out of the West to Asia. We're looking at a global economy. I think they still are focused on a domestic economy and kind of a classic post-World War II expansion without realizing that the world has definitely changed. And when you look at the tremendous availability of labor and capital equipment on a global basis, it's very, very different. The idea that you worry about your wages in the U.S. and so on, unless Trump really does build a wall around the country and we become completely protectionist, you got to look at things on a globalized basis. So
that means that Nehru is relevant? I mean, what if we get to 4? What if Nehru is really 4%? I mean, does that wind up changing the game? Or
well, first of all, that number is a terrible number. The Fed in 2012, December 2012, they said in writing that if the unemployment rate got to 6.5%, that they were basically going to discontinue ease.
The Bank of England did a similar thing. They used 7% as the line in the sand for when they think about hiking
The point
rates.
is the unemployment rate is the ratio of the people looking for work to the denominator, those people plus the people out at work. Now, if you have fewer people looking for work, the unemployment rate goes down, and that's what happens. People dropped out of the labor force. A lot of them were post-war babies retiring, but there were younger people who stayed in school hoping more education get them a better job, and middle-aged people who said, I can't find a job, I'm going to drop out. But those people are available, and they're starting to come back into the labor force. So the unemployment, if you hadn't had this decline in the participation rate, which is what this is describing, the unemployment rate would be in double digits now. It wouldn't be 4.4%.